Hi everyone, delonewolf here and welcome back to EVE Talk, your weekly look at the market in EVE Online. When it comes to EVE news, there's not that much that happened over the last week. Now, it is of course a couple weeks after the expansion, so it's kind of normal that CCP can't just rapid fire changes and big stuff all the time. Yeah, it has quieted down a little bit on the news front. What I did notice is that quite a few large groups are joining faction warfare, so I do believe that there's pretty high activity and quite a bit of action to be found there, and that just makes me more excited for the allegiance system, which potentially will get early next year, because that could become total chaos when just everyone can join in at their leisure into the faction warfare experience and interact in different ways. So I'm really still zoned in on that one. And hoping for news and good news. Other than that, I am a little bit worried about the next couple of weeks. If I'm not mistaken, the Dragonflight launch is coming. That could really have a little bit of an impact on player activity. And then there's a launch for Path of Exile League as well on the 9th. So we could be looking at a pretty rough December when it comes to activity numbers. But of course, all of that will then hopefully be reflected in the market, and that is why we are here. Before we get started, as always, a quick look at the New Eden store. I received a couple of mails from CCP, but I think it was like a reminder for the free 7 days of Omega and things like that. So we still have some sales now on Blood Raider and Guristas, on some skins here on the services front. Though no sales in the New Eden store itself. So let's jump into the market. We will start as always with the pilot services, and that's coming in at 2 minutes. Like that, and let's get started. Here is then a plex, and a little bit surprising to me, but we are continuing to climb now after a couple of weeks of hesitation, and it even looked here when the 5-day moving average went below 20-day moving average that we might turn the corner and bring prices back down a little bit, perhaps some more supply, but basically I think the anticipation and then the launch of the expansion was very successful. Players coming in, and a few of them at least deciding that I'm also going to buy some plex and turn them into ISK on the market with these types of prices. But now the increased prices have become a trend yet again. So for the sellers, we're well above 5 million at 5.1 million, and the buyers are edging towards 4.9 million. Let's see if there's anything happening in the player-owned stations, just a little bit more, but not by that much. And then for the sellers, they are in competition with GDA 4.4. So upwards pressure taking over again for Plex. It is definitely possible that we got a little bit of like an expansion bump here that kept prices in check. But after a couple of weeks, of course, you have maybe set up your new routines. Like myself, I'm still heavily invested in getting that Paragon mission done every day, getting the points. I've got the Obelisk done, which I'm really happy about, but I still want the Myrmidon. I want a couple of Galente destroyers as well, so there's still a lot for me to do there, and it's a daily little carrot, but perhaps it's not enough to keep players motivated and spending real life money on Plex to get ahead. Maybe a lot of that is done. So this is what I'm seeing here for the multiple pilot training certificates. Next, we of course had that sale, but what's really different compared to the previous sales before the changes to real life prices is how quickly we have recovered from this one. So we did go down on a couple of days with averages below 1.25 billion, but you can see 2 weeks in we're back towards the 1.8 billion, well above 1.75. There we go, above 1.8 billion for the sellers, 1.7 for the buyers. So still a little bit of margin, but that's kind of normal when you get the biggest volumes by far done over a sale, which was probably timed well. My expansion time, lots of interest into that, and the difference, it's absorbed quite easily, at least price wise. So we could still suffer a little bit, I think, with these types of volumes, but overall the market is going right back on the upswing, and for this week I think Plex is starting to lead the charge on all of that. Skill extractors then, had a bit more of a recovery after the September bump and a bit more hesitation, but then started to move back up to basically have a catch-up move with Plex. And then now at the tail end here, you can see although we are slowing down, 5-day, 20-day are starting to come together. We're still above that, and as a result, I'm still seeing the upwards pressure here heading towards 600 million, 590 for the sellers, 573 for the buyers. Definitely a decently narrow margin here between sellers and buyers, and again slight upwards pressure as volumes are starting to come down post expansion high. The impact on the injectors here are our large scale injectors, and they're doing a different move. They're definitely starting to trend down after breaking 900 million, staying there for a couple of weeks. Not sustainable for the market, and we are starting to see some pressure here. Just below 900 million for the sellers, but 833 million for the buyers. They're basically signaling that 900 million is not something that we can keep doing for a very long time for the large scale injectors. Decent volumes here as well, and perhaps this has a little bit more legs than Plex itself when it comes to longevity and a bit of a high, you could say, from the expansion. That's what I'm seeing here. Maybe some more players playing around with large scale injectors, investing in that as well, is keeping up a little bit more momentum, and it does also has potentially a longer tail for supply that is helping us keep prices in check. For the small scale injectors, then very similar chart. So I do think here we're talking a little bit more of a general trend. It still has that a little bit more choppy, wavy pattern on the daily averages, but the 5-day, 20-day are clearly in sync here. Not as much of a volume spike, but also not as much of a reduction here. So pressure as well on the small scale injectors, 180 million almost for the sellers, 165 for the buyers. So here again a decent margin that has opened up, showing that buyers are signaling to the market, don't go too crazy. We are not all swimming in ISK, and you gotta be somewhat reasonable for the injector prices. So all of that is I think potentially good news for the daily alpha injector. Yep, there you go, same story here, seeing quite a bit of pressure. So big volumes here, obviously another CCP sale, but again what could be happening here is that you got a little bit more speculation, you get a little bit more long-term thinking as well in players that are looking at these daily alpha injectors, and all of that means that perhaps supply is not cratering as quickly as what we're seeing here for Plex, and as a result we are in a very nice spot. 48 million for the sellers, 45 for the buyers, so below 50 on a daily basis for a daily alpha injector for alpha players. A very doable goal, obviously far better than the 70 million we have seen before, and so I think here CCP is very happy with this result, and I personally am decently surprised that we're able to hold on to this for almost a month at this point. That's actually pretty impressive, showing that these volumes are obviously quite substantial as well, just like with the multiple pilot trading certificates, biggest volume over a week, so that does give us a little bit of breathing room. But here, a couple months in, we really started to move back in, and my expectation, honestly, is that this is going to be a faster and faster movement, because it becomes a little bit predictable that CCP wants to keep this item in check. And then finally we've got the hypercores that are, well, not sure which way to go, actually really plateauing at the moment. So inflation expectation, perhaps players are hesitating on that all of a sudden. 530k to 511k, very narrow margin, but at a 1-year high point range, so extremely expensive hypercores at the moment, and I'm using this a little bit as a gauge for activity, so that feels like it's okay, but perhaps also hesitating to really go any higher than basically the expansion high. And again, I think there are some outside factors here that could bring this back down a little bit, but also sort of expectations when it comes to ISK-like inflation, then they're not so sure which way to go at the moment, but we are obviously extremely expensive in the hypercores as well. Let's move on to the minerals next at 935. There we go, and you may have seen it on the ticker already as well, despite the fact that we don't have a good chart here again. So I'm gonna actually try this one now. Just gonna click a little bit to the left. Damn, even then it doesn't. Oh, then maybe I need to like reload it or something. No, very terrible chart for titanium. Not really sure what's happening here, so we'll just go to the prices. If we go to JITA itself, because there's lots of sellers for titanium all around, 465 for the sellers, buyers now 417, well above 4 ISK. So very good news for those high-sec miners. Now supply is starting to show up, so here you can see 5 hours of supply, probably 300, 400 million units of titanium, but at the moment we are still going up in price for titanium and heading towards that 5 ISK for the sellers. I don't think we'll succeed in making it there. That would just trigger too much supply all of a sudden. We'll probably stay below that, but this is very significant. Best price we've had in a very long time for titanium. So especially for the high-sec miners, I would say very good time to be bringing titanium to the market. Maybe not just mining like crazy, right? Hopefully, like myself, you followed the careful path and you said like, yeah, maybe we won't sell everything. I was doing mostly a 50-50 or even holding off completely when we went too low for titanium, which means that I have a decent volume available for the market, and this is of course a great time to be selling at the best price we've had in a very long time. Sometimes patience does pay off. Here is pyrite. Do we get a better chart? Yes, we do. And this is interesting because today's daily average is actually going back up. So here, a little bit of hesitation. Good news, I would say we're still above 10, 11.72, almost 12 for the sellers. And look at that, 11.27 for the buyers as well, showing decently strong demand for these high-sec minerals. Another one where honestly, I would be selling at the moment. I think as much as I'm comfortable with, basically as much as possible, because this is again the best price we've had in many months. Mexon was a different story. That one had pressure but was still holding on to 70 ISK, and we are starting to capitulate here. As you can see, last week or so we have gone below 70. Sellers are now at 67, buyers are at 63, and so here it's very difficult to say what you should be focusing on in the next few weeks for your mining. If, like myself, you have held on selling, you're looking pretty damn good. You can sell your trades, you can sell your pyrite, and you can still sell your Mexon if you want to. I would definitely start to 50-50 that one, but that also means that when it comes to your focus, you can basically mine whatever you want in high sec, and then just you know, be a little bit more nimble. Of course, if you're mining lots of titanium and pyrite, I would bring that to the market as quickly as possible. If you're mining Mexon, you can basically slow down a little bit on the transportation, start to build up a little bit of reserve, because I would personally not be surprised if something happens in nullsec where all of a sudden there is just a little bit more construction required, that we could push Mexon back above 70 pretty easily. If I look at the titanium and pyrite chart, although the titanium chart is annoyingly not showing up that well at the moment. For low sec, we went to 500 ISK for Isogen here, and we'll start to hesitate. Yeah, 503 for the sellers, 488 for the buyers. 70 million here at 508 is going to keep us pinned down for a while, but it's only here for another 3 days. So overall, actually, I have to say, whoever set up this sell order, and if it was indeed one that was 89 days at the start, has really done a very good job, because this is the one that we're bumping into at the moment. And so this is the one where, well, who would have thought a couple months ago that you could have sold these at 508. Well, here we go. He's actually you know, on the front line to take advantage of this increased price for Isogen. But we are above 500 ISK, and yeah, we still have some 70-50 million, some big chunks out there that are keeping things in line. I think still not fully supply demand price, but we are starting to get a little bit closer, right? You don't see 100, 200, 300 million, let alone 2 billion units that are keeping us in check completely. Here it is. I think it can become a different situation very quickly, but we have potential to go higher. We also have potential to go lower at this point. Don't expect this very clear uptrend that we had over the last year to continue in this uniform and predictable way. I think at this point we have to start taking supply, active supply and demand in mind as well. to not be so sure that I'm just gonna hold off now and then we'll see 600 in a couple months time or anything like that. I would not bet on that at this point, and the main reason for that is because what we're seeing here in Noxium, while Noxium also had a very nice rise up to 1,000 disk when where is it here? Isogen was turning the corner from being stuck at the 400 mark. You can clearly see that this is a different market with ups and downs, which is far more indicative that we're starting here to be really in that active supply demand situation. 934 to 901, definitely a good price. Looking at the volumes here, right, we don't see 10s, 20 million units that are keeping us in check. I personally don't think that Isogen is that far from that situation anymore. That's my personal take on that. I could be wrong, right? It could be that there are still plenty of reserves and that this is actually very much still kept in check by old reserves of Isogen, but I'm not so sure about that anymore because everything is really starting to be in flux. And become far more demand dependent, I would say. As long as they're churning out big ships in nullsec, I think we're good. But if that drops off, which can happen as well, both low sec and high sec minerals, I think, could suffer quite a bit. And then, of course, for nullsec here, story might be a little bit different. I'm still not exactly sure why we're pushing the 3000 ISK for Zydrine. Look at those buyers, they are first up there as well, and that is a very strong indication, of course, that this is dictated by the sellers. And so I would not be surprised if a part of this at least is manipulation as well by big players from nullsec that are now able to demand this price. Now there's going to be a logical reason for that as well, and if it is large constructions projects for big ships, then I think it is understandable that they also need more Zydrine, they also need more Megasite, and thus they can ask for a higher price. But what I would not be so sure of is that we, on a slowing down, let's say we see a uniform decrease in price for all the other minerals, that we'll see this translated in nullsec as well. Because in my opinion, sellers here have this stranglehold on price. They can set the price whatever they want, and buyers are forced to follow suit here. And as a result, we might be looking at almost 3k for Zydrine for the foreseeable future. Megasite, sort of the same story, not just as high, but still 2007 to 750 for the sellers, almost 27 for the buyers. This again clearly shows that it's these guys, it's the sellers that are setting these prices, and that could be here for a while. And then finally, we've got the Morphite market that is going back below 40k again, 30, just below 40 for the sellers, 37.5 for the buyers. The margin is still very narrow. I would not be surprised if things slow down a little bit on supply side, we go back up. But here you also do have a supply demand chart where we go up a little bit, we go down a little bit. It is not a single direction now. So I do think that we might stop here for nullsec, but we could be stuck at these high prices for Megasite and Zydrine for quite a bit. Next up, the PI market, 1815. There we go, and let's just get started here. I don't really know what to expect. We've got broadcast nodes that is breaking through 2 million, going back down a little bit. So first signs again of a slowing down of demand. 1.9 to 1.84 million, still a very narrow margin. So showing that perhaps the above 2 million was a little bit too much for broadcast nodes, but that we're still in a strong demand situation from that perspective. I'm really not sure. We'll have to go through the list to try and determine what's happening. So construction blocks back above 10,000 disk, 11 in fact for the sellers, 10,000 for the buyers. Normal margin. So this does not show a complete collapse of demand. On the contrary, this is starting to show an ebb and flow that would be in line with supply and demand as well. Hopefully we can be in that situation. I think it would be pretty healthy for the game. Same story here for coolants. We're picking back up, back well above 10k for the sellers. First buyer coming in at 10k as well. So this is showing that, even though we can get a little bit of a pullback, and I sold here. Did I sell all? I think I sold all my coolants probably at the wrong time as well. But no, I held off. That's true. I held off on a couple of them. Coolants, and then I think even mechanical parts as well, because they were tied to fuels and they were all below 10k, but I sold basically everything else when it comes to my PI. But there we go, nice little recovery in both of these, so that's good news. Enriched uranium flat, not at the high point, but still 12,000 for the sellers and almost 12k for the buyers, showing strong demand and a very good price, far more stable than the rest, far harder to make as well. Integrity response drones then still above 2.5. Let's take a look at that. Nope, just below that for the sellers, and look at that, 1.6 million for the buyers. So this one is another one where maybe demand is starting to struggle a little bit, but for now sellers are easily able to get a very good price for integrity response drones as well. Our mechanical parts then, a little bit of spoiler back there, but back above 10k as well, with a 9.5 for the sellers, for the buyers, so normal margin, showing that we can go back up, and when prices go too low, I'm not the only one that then has that reflex of, you know what, I'm not going to sell this one, but I am going to sell a lot of the others that are very high, and as a result I think demand drops off a little bit and prices need to go back, and this is honestly a price range that I feel is very familiar. Above 10k for refined PI materials, or around 10k for a refined PI material, is normal, and then a 1,000 or a 10% margin between sellers and buyers is what we've normally seen for these types of items. So this is very reminiscent of before both scarcity and the resource bonanza period, to me at least, for this one. Now that does mean that for specialized, my expectation would go towards 100k, because that's what I used to always easily sell my robotics at or above. But yeah, miniature electronics here losing a little bit of ground as well, but again, 12,000 almost for the sellers, 9,000 for the buyers. So here definitely a bit of margin that has opened up, but the average prices are easily in the green, in the rather expensive range. Nano factories then also losing a little bit of ground on this one, 800k to 760, so the margin is actually pretty good. Organic mortar applicators really getting that expansion hangover and losing quite a bit of ground. 700k to 636. That's actually probably the lowest price in half a year for organic mortar applicators. Another sign that perhaps some demand is struggling in the game to keep up. Then we get an opposite signal. Here is recursive computing module, a very big volume purchase despite prices above $1 million, pushing prices to 125 and buyers above $1 million at this point as well. So it's really a mixed picture. And this is interesting, definitely interesting to me. Robotics, look at that, 95k coming into play, 100k coming on the front page for the sellers, 93 now for the sellers, 85 for the buyers. So it's still going to be a struggle, I think, to get there, but perhaps your really good sell prices for robotics could, in the next couple of months, if this trend can continue, of course, and if demand does not break down with again a couple of outside factors that are coming in the next couple of weeks, then we could be looking at a very interesting situation for specialized PI materials, where you get that above 100k, great time to sell. You go below, hold off a little bit, have a little bit of patience, and I might actually go back to hunting for a couple of planets that can make robotics on a single planet, because that does exist, and that for me is very cool to be able to set up something like that for PI. Then we get rocket fuel, still doing really well, 13.5 to 12.2 is a great price as well. Self-harmonizing power cores, really nice as well. A little bit of hesitation at the tail end, but coming from a one-year high point, 2.3 million to 2.3 million for the first buyer here as well. So definitely to 2.5, so that's really not a big margin between sellers and buyers. This despite these very high prices and the slight pressure on the average price itself, showing that is definitely another sign for strong demand. Smart fab units though, touched 100k, so that's really good, and obviously another sell signal right there. But then that sell signal was followed by the market. And you can see on the volumes here that not too much volume can have a big impact on the price. So we're down to 88.5 for the sellers and 78,000 for the buyers. Still on this one-year chart, 88,000 for the sellers is still a pretty good price, and it's only a 90k, 200k jump in order to get back up there with Still some upwards pressure in the specialized PI material, so I think it could happen. It would be very interesting. Slight pressure on sterile conduits as well, but again from a very high range, so very narrow margin here as well between sellers and buyers. So hopefully demand can keep up, because I would love to be back at this. Here we go, supercomputers. Just a little bit early, but it's understandable because it's been so long since we've comfortably been able to try and sell towards 100k, right? So this pressure here is quite understandable, but look at that here, 105, 113 coming into play. And if we can push into that, it's just a couple thousand units, I think it is possible, then yeah, selling a specialized PI material above 100k first time for the year is possible here. And then those buyers, they just need to be first up above the 90k, and then I would say that we have a real chance that we're back in the good old days for PI in general. Synthetic oil above 10k as well, 10.5 to 9.1. A little bit too much margin here still, but again, it's gonna be very interesting, and it's all, in my opinion, going to depend on demand, and that new demand which didn't exist back in the day. For a lot of this PI stuff, which is those large ships. So I do think that for PI at least, yeah, Siege Green and all of the changes to industry, to the needs for the capital ships, very successful from the perspective that your PI is worth what it used to be. So very, very interesting. Synthetic synapses, taking off here, 120 to 109, 1 year high points. You can definitely try to sell that. Perhaps the faction warfare stuff is starting to show through here, because this is tied a lot to implant production, and it is possible that we're seeing a little bit more podding happening at the moment as faction warfare heats up. That's at least my theory why we're doing so good on the synthetic synapses. So if you have some of those, you know, last week I sold everything pretty much for PI, except if I'm not mistaken, I'd have to go check, but I think I held off on the coolants and the mechanical parts. Then we get our transcranial microcontrollers, still able to command 105 for the sellers, 92 for the buyers, so a bit of pressure mounting here as well, but still it's around that 10%. That definitely feels like what I used to know. And then this one, that's actually something that does make me very happy. Look at that, couple of data points above 7.5. 5-day moving average trend definitely heading up as well. Volumes picking up for water-cooled CPU. 7.9 for the sellers, 6,000 for the buyers. If this guy can make it to 10k, then I also do believe that we got a very strong signal that a lot of these specialized will make it to 100k as well. And then our wetware mainframes, 1 year high point as well, 2.1 million for the sellers, 1.9 for the buyers. Very, very interesting to see this show up as well. So we get some hesitation here and there in advanced PI, but across the board, I think I'm still in the camp that we are seeing strong enough demand to maintain these prices, to push up those items that in the chains that are basically lagging behind, and that we will potentially get back to those very familiar numbers, at least for someone that's been playing the game for a while like myself, which is 10k for a refined PI material. I'm happy with that. That's great and normal price. 100k for a specialized PI material. I'm happy with that. That's a good price, right? Just below that is also still a good price historically speaking. But to be able to get back to that would be very, very interesting, and would make me very happy, of course, to have kept up with my PI on a daily basis for that long. Because, I would love to you know, be able to go back to an old setup of mine, which was to have a couple of robotics planets, a single planet that churns out robotics. It's really cool, and I would love to get back to that. But we still need 5-10k to gain on the robotics and to see some more signals that we're back in that situation. Next up, advanced moon materials coming in at 2910. There we go. This ought to be a different story. So let's get started right away. Here is crystalline carbonite, and the pressure is mounting after breaking through the 100 disc, heading for a 120. You can see here at the tail end, 5-day moving average crossing the 20-day on the downside. Daily averages starting to head for 100 disc. 110 now for the sellers, 101 for a couple of buyers, and then buyers are back below 100 disc. So unfortunately here, this is not a turnaround just yet. We had a little bit of reprieve from bottom prices, but this is spotted. Supplies are coming in and the pressure is back, at least here for the first one, crystalline carbonite. For Caldari, it is titanium carbide that is starting to top, almost got to 150. Didn't quite make it, and I think by next week we'll be looking less healthy than this, 138 to 135, and that may become a self-fulfilling prophecy. Of course, if I tell people that if you want to sell, you gotta try to sell right now. The best price you've gotten in the last 2 months, probably the best price you'll see for a couple of weeks, if not months as well here. But you can see even before this that the daily average here is starting to show signs of cracking as well. On the Minmatar front, that basically already happened. We did push very nicely towards 150 on just a couple of days, so a 50% increase almost that happened here in a matter of 10 days, 2 weeks or something like that from below on the disc, but we just landed right back on that 100 for the average price, 101 to 94. So yeah, this is back on that terrible range for the last half year or so. For Amar, then we've got tungsten carbide that just hovering around the 110 mark. Not much to say. This one is also did go from 100 to 120, and since then has been struggling to maintain its price, basically 115, 113, narrow margin. But I think if you look at the full 1 year chart, a 110 is not a great price either. The metamaterials have been far more stable throughout all of this, if I'm not mistaken. Yeah, and there we go, photonic metamaterials, sort of the same story, except that the bumps are far more shallow. 6,600 to 6.3 when we started here at a high point of 17.5, and that's definitely not a great price. For Caldari, non-linear metamaterials, 1 year low point below 10,000 disc here for the sellers, 9.3 for the buyers. So this is also really not that great. Minmatar, it's plasmonic metamaterials, also 1 year low point right now, 9.3 to 8.6, so well below 10,000 disc. And then finally for Amar, it's terahertz metamaterials, which is going for 9.6, well below 10,000 disc as well. So this is tied to the construction of mostly ships, I think, but also some modules, if I'm not mistaken, is very cheap and is of course tied to Tech 2. This is unfortunately for those that are invested in this or that or do a lot of moon mining, because this is probably trickling down to the base materials as well. You are not looking at great prices. We are massively oversupplied, and this despite the fact that Tech 2 ship prices are also super low already. Let's go through the other advanced moon materials to see if there's anything special to spot, but I don't expect it. Here, for instance, we get the exact same story. We got a bump up to 50k from probably 35 or something like that, and then now 5-day moving average crossing. So we are starting to come back down. Supply is coming in, taking advantage of these even slightly higher prices. Ferrogel, exact same story. Pressure is here. Fullerites, same story here as well, and look at how a very steady momentum, so a steady flow of fullerite is just breaking us down from 600 back to that low range well below 500 disc. Hypersynaptic fibers, see a little bit of a top. Look at those daily averages here, breaking the 20 as well. Nano transistors, a little bit less pressure right here in the last week or so, but also far less of a bump as well. Then we've got our phenolic composites. There we go, breaking down here in the last 4 or 5 days, well below the 20-day moving average. Pressurized oxidizers still making its way to 10k. I'm afraid, looking at everything else, that by next week, again, might just be a mistake for me to then call on people to say, well, you're still selling at 9,900 disc. So if you want to sell, if you have these investments, you know, this is the best price in 4 months. So it could be the time to liquidate. Then of course we are going to see that pressure on the price, but I think it's, you know, to be expected that that's what's going to happen here anyways. Reinforced carbon fiber, same story here. 10k could have bought for 7.5, so you do have a little bit of a trade here. The biggest problem that I'm seeing with trying to trade this stuff now is that you know, the volumes are going to do exactly what we've seen here across the board, push those prices down very quickly. Ceramic fibers well away from the bottom though, so this one is doing a little bit better, 290 to 283, basically our one exception at the tail end that is not pushing right back through the 250 and getting back to that lowest range. But to be fair, this is also one of those that for the entire year has probably held on the best, with most of it above the 250, starting the year at 350. So overall, I would say advanced mood materials still massively oversupplied, and the bump we saw over the last couple of weeks is now starting to get filled with supply, causing a lot of pressure on the price, which also means that for Tech 2 ships, I don't expect a real bottom to be formed just yet. So they're coming in now at 35.25. There we go. Let's get started. Here is our Basilisk chart. Yeah, just back below 110. So 115 for the sellers, 104 for the buyers, and you can see these average prices in the last couple of days below 110. So you are basically picking up Basilisk for 105, 104, stuff like that is easily happening. Cerberus, very same story. In fact, 1 year low point now for the Cerberus, 124 to 115. If you haven't made your purchases in some of these Tech 2 ships yet, I would highly recommend you wait for a situation like this. 1 year low point, the margin is very thin, right? 124 to 115. So we're basically talking 9 million. Less than 10% on this, and we're still on the downside as well. So you can put up a buyer below 120 and you are definitely looking pretty good for your chances to grab one of these ships on the very, very cheap. Curse, reverse situation here for the Curse. I'm not really sure, might be tied to faction warfare. Is that one of those that cannot be detected with directional scanner? I do suspect that these types of recon ships will play a big role in faction warfare. If I would be hunting for PvP and would be looking at an option there, I think I'd be doing it in something like this. So this one is going up in price, 157 to 137. There's even a 2-month trade here, bought well below 130, sell now, and you get a decent amount of profit. Then the Damnation is starting to head back to 250, so there's definitely a bit more interest in this as well, 250 to 227. But it must be said, of course, we're basically just filling a little pothole down here at really bottom prices. So this is exactly what I would recommend that you do as well. Look for these low prices. You want a Damnation, buy a Damnation at this point, and that extra buying is of course starting to show up in the price, but it's all very slow, very muted, right? Even the Deacon, that's a small frigate, right? The price is less than 20 million, 18 to 14 million for a Deacon, and yet that is really struggling to get any momentum going, tradable momentum on this one as well. So yeah, it's just, there's just too much Tech 2 out there at the moment. It's too cheap to make it, and as a result, the Eagle 120 to 110, and that actually counts as a slight bump over the last 2 months. Amazing. The EOS here also doing a little bit better, currently at 284, running out, right? Sometimes that can happen as well. I even bought one at 254, so I could make a couple million on the EOS, but honestly I'm keeping it to fly it. This happens as well, but expect this to be plugged by next week with quite a bit of supply. I think the Ares is going from that 50 million and starting to come back down now, 48 to 41 million. So not the time to buy, probably just too late to sell. Flycatcher seems pretty low to me. Below 40 for the sellers, 36 for the buyers, right? You're buying 37 pretty easy. A Flycatcher well below 50, 40 is pretty damn great. Guardian, right? Same. New very low range for the Guardian. Not the best price for the last 3 months, but still below 110 is definitely not bad. Heretics slightly better, but also cresting, right, together with advanced moon materials. And then we get the Hound. That is more interesting, but I think I mentioned that a couple times as well. Smaller ships, right, less of a threshold to make that investment, to make that risk, and a little bit more volume, such as stealth bombers. And this is very, very nice when it comes to being able to trade, right? Buy below 15, right here and right here. Try to sell at 25. Very, very nice, but you gotta be fast. You can see here just a couple days where you had a slight opportunity to do so, and then supply comes in and brings us back down. Not at a low point just yet, 18 to 17 million, but if some supply keeps coming in, then you have hopefully another buy opportunity below 15, and then you're ready with your Hound. So this is very nice, a little bit of tradable volatility here in the Hound. I hope some of you guys took advantage of that. Ikitursa back above 500 for the average, yeah, 545 to 488, so you're still probably being able to buy one below 500 million, but it's going to be harder and harder to do. And then even our Ishtar doing a little bit of a slow recovery back above 150 for the sellers. So I've got so many of them. I think I bought one extra as well. But here September, October, definitely the best period to try and buy one. I think pressure will be back next week though. Seeing what a lot of the others and advanced movements are doing. Kirin coming down from a high as well, now below 20 again. 18 to 16, so too early to buy. And then here's the Manticore that also had a nice little bit of a bump and very quickly makes its way back to the 20 and 17 million for the buyers. So even if you want to just be ready for the trade, I wouldn't blame you to put up a buy order right now for the Manticore. Nemesis, right, a little bit of a bump here as well, buy below 15, sell at 20, 25, definitely possible for a couple of days, but then in a matter of a week, we're right back down here, 15 for the sellers, 14 for the buyers. You want to have an opportunity? Yep, you can buy Nemesis below 15 million right now. Nighthawk also coming back down, so this was a little bit of a surprise to me that even a couple of command ships were having these tradable bumps. Buy at 250, sell at 350, but obviously 25 a day, so it's not like you can buy 4 or 5 Nighthawks and hope to make that trade happen there. But we're down below 300, 268 for the buyers. It's still too early here. But that was a tradable bump, and with enough pressure, again look for a below 250, and then we're starting to see potentially a pattern at this range here as well. With that one warning, I would still give that one warning. I still see, CCP not being happy with the situation, with the price, and especially the value proposition of Take 2. I think it is too high for what CCP will want. This is my speculation, so I don't have any information or anything like that. But I would not be surprised if at some point CCP comes out with either maybe the nerf bat to hit Take 2 pretty hard, or with changes that make them more expensive. Which is why I am buying at the lowest possible prices and then holding on mostly. Onero's going back up a little bit. Up 125. Yeah, it's on a lack of supply, but look at that, buyers comfortably saying, well, we'll just keep paying just above 100 million for the Oneros. We're not in any hurry. We know that there's supply that's gonna come in and bring prices back down. And then the Purifier, all right, unfortunately second one didn't make it to 25 million. That would have been the dream for seeing starting to see a pattern in potentially trading. But yeah, buy below 15, which is what you can do right now, well below 15 at 13 million for the buyers here. And then if you get opportunities to sell above 20, you're still looking at a pretty good trade. So the Purifier for me, 1 year low point for these buyers. Very, very interesting if you want in on a potential stealth bomber trade. Rook back above 150. So pretty slowly as well here. And then the Saber close to 1 year low point as well. Yeah, not yet there, but just above 35. That's definitely interesting as well. Scalpel a little bit in the middle. Scimitar a little bit in the middle. Sleipnir above 300 million. Definitely a winner for the expansion patch and announcements here. Very expensive. I think I didn't buy any at these low prices. Unfortunately, should have done so. And then we've got the Vagabond, also slightly more expensive, and then the Zarmast buyers back below 400, yeah, at 350, completely dropping out of the market. It's gonna actually putting a little bit more pressure, and then you can probably grab a Zarmast well below 400 million. So overall for Tech 2, we're still seeing pressure. I think we are seeing some trade potential, sometimes even in larger ships, which I did not expect, but still bombers, definitely a couple of interesting charts on that one in general. And yeah, my outlook for that, as I've said, I'm mostly buying to hold, and I'm waiting for yeah, potential changes, I would say, in the game. That is my gamble at the moment with the Tech 2 ship market. Next up, we've got the Tech 3 ship market, 4450. On this one, as always, we start with the destroyers, but I don't think we'll see too much action here. You can see very narrow margin on this chart between sellers and buyers. It's completely closing up here. Very, very stable chart as well. Confessor 45 to 43 million. That's as narrow as it gets. It is the cheapest price potentially in close to the last year. So you are, we're looking at the cheap Confessor range at the moment. But honestly, I think it's just basically because there's enough gas supplies out there to make him a little bit more cheaply, and I wouldn't speculate on this type of a chart. It's just not volatile enough. Then we've got the Hecate here, right? Again, min-max on quite a few days. You just don't even notice it. It's currently 50 million for the sellers, 47 million for the buyers. 2 million on something that costs 50 million is nothing. Jackdaw slightly more, I think, on this one, 50 million, no, to 47. That's a 3, yeah, it's slightly more, yeah. It's 3 million on a 50 million item, which is still basically nothing. And then finally, we've got the Zwepel here as well. That is currently going for 44 to 41 million. Definitely low as well. If you absolutely have to, want to, then Zwepel and Confessor are looking pretty good, especially if you plan to use these as well. Hecate Jackdaw still a little bit more expensive. In general, all of these are lower than in the last 6 to 10 months. And I think the main reason for that is going to be better gas supplies, lower input prices, and thus the ability to sell at a slightly lower price. But yeah, again, it's that same problem in my opinion now. The value proposition for these Tech 3 destroyers, even at these relatively low prices on the chart, is not good compared to the Tech 2 ships at the moment. So we'll see, of course, what CCP decides to do. For the cruisers, that was a little bit better. Here is the Legion, for instance, just recovering from a sell opportunity well above 200 million. Still at 200 for the sellers, 185 for the buyers. So if you have bought well below 180 in some of these periods here, even below 160 on a couple of occasions, you're still looking at a nice sell opportunity. Then we've got the Loki starting to show some pressure as well, but right here, right by 170 or something, sell for 200 million. Pressure starting to mount. It's not the time to buy yet, in my opinion, but this again shows if now you want to trade in Tech 3, I think the cruiser hulls are the place to go. And then we've got the Proteus chart that is also recovering from a sell opportunity. Could have bought below 180, sold, yeah, 220 something, 230 even easily, 230 now for the sellers, 210 for the buyers. So if you have that cheap Proteus, you want to take some profits, this is definitely the time to do so. And then the Tengu is fully recovering now. Look at those minimum prices dipping below 180, 187 to 174, 175. So I would say this, yeah, it's maybe a touch too early, but it's starting to look very interesting because the downward trend has that momentum. Look at the gap opening up between 5 and 20-day moving average, and your daily averages are still well left of your 5-day moving average. This is the time when a buy order well below 180 has a good chance to trigger. Yeah, if you want in on the Tech 3 cruiser trades, the Tengu is looking like it's on a jumping point, and the Legion and the Proteus are obviously in sell territory. Loki, we need a little bit more patience for that, but I would definitely put my eggs in the cruiser market rather than the destroyer market at the moment. And then finally, for the extra product of the week, someone requested that I take a look at those new faction ships. So I'm going to try and work them in as well. So we're going to take a look at the faction Battlecruisers this week, coming in at 49.10. And then I think next we'll have those new faction frigates. That are, I'm not sure where we'll find them, but that'll be for next week. For now, let's go to Battlecruisers then normally. It is new, so the chart won't tell us much, I don't expect, but Navy faction. And so we'll have those that already existed, like the Brutix Navy issue. Right here, I think we'll go that way. So Brutix Navy issue, actually look at the supply here, look at the price. So this is showing that faction warfare is definitely booming at the moment. Lots of LP being created by the players. 165 to 150 million, cheapest price in a very long time. Here, if you want to play on potentially what I mentioned earlier, those outside effects, talking the expansion for the World of Warcraft, we're talking another league launch for Path of Exile, could have an impact on all of this stuff, then this is a very nice jumping point for instance, the Brutix Navy issue. But then if you look at the new one, here is the Myrmidon Fleet issue, and obviously that one is a difficult chart to read. We do see decent volumes after a little bit of time, 165 million to 145 million, definitely feels like it's gone right down to the same range. Yep. And is pretty affordable. So I think you will have the exact same input costs. We'll take a quick look at that. Here's the blueprint. So 2.8. Oh, it's just minerals. That's interesting. And on this one, if that also says 2.8, yeah, so it's the exact same input cost. So those prices will be very similar to the existing Navy faction Battlecruisers. And there are no pirate factions. Yeah, exactly. All right, so that's Gallente. Then we'll look at their opponents, which I think will be doing even better. And let's keep in mind a 165 for the sellers. So let's get started with the Drake Navy issue, which, if I'm not mistaken, already existed. Oh, a little bit more expensive, actually. 180. 182 for the sellers, 159 for the buyers, and actually expensive on the 1 year chart. I did not expect this. I thought they'd be making even more loyalty points because they had won all their races, all their faction warfare stuff. Quick look at the agency. I don't think there's anything happening at the moment when it comes to the faction warfare goals. So maybe that story has to develop, and maybe actually they just feel expensive. So we are talking 180 for the sellers, 159 for the buyers, and then the new one is the Ferox Navy issue. Obviously, again, similar charts to the Myrmidon one, 175 to 156. Actually feels a little bit expensive. If I want to do the investment, yeah, Brutix and Myrmidon Navy issue seem to be the ticket. Then we've got Amar and Minmatar. We'll start with Minmatar. Here is the Cyclone. No, then I want to start with the other one. Hurricane Fleet issue. Actually expensive on this one as well, I would say, although a little bit all over the place at the tail end. 168 to 146, so maybe slightly expensive on this one here at the tail end. And then that Cyclone Navy issue is selling for 167, so at the exact same price because of the exact same input cost. And then the Prophecy Navy issue is the new one, so I should have started with the Harbinger Navy issue. That was actually going down in price a little bit, but still 167. Okay, so that's basically the exact same price as well. And 169 Prophecy Navy issue, maybe a little bit more popular than the Harbinger Navy issue. Definitely a very cool model as well. Does it have launchers? Let's take a look at that. Yep, drones, 125 capacity, 50, so that's 5 medium drones. And then for the 5 launchers, kind of like that. Trades, drones, energy turrets though. So okay, well, would have loved to see the missiles there, but that is not the case anyways. Overall though, maybe fortunately, I'm not really sure what to say. They cost exactly the same as the existing faction Battlecruisers, and as a result, their prices have come right in line with those ships. and we've got a slight movement in the LP part, I think, for the BPCs, with at the moment the Galente definitely making up for some bad losses there in the race, with very inexpensive ships at the moment. If you're looking for an opportunity to gamble on this one, definitely Brudix Navy issue, Myrmidon Navy issue are probably the ticket. But I must warn, of course, that all of this has changed substantially. The whole faction warfare dynamic has changed substantially, and this could, of course, just be a reflection of the current state of faction warfare, the current potential to make LP without necessarily maybe needing to be the winner of a faction warfare race. And then this is just going to bring the Brudix Navy issue in line with most of the others, and then it just becomes a completely different story where you won't have these waves. That's actually really possible as well, that we won't have these waves anymore. And then I think what makes sense to me is that Drake Navy issue and Ferox Navy issue are more expensive just because they are more popular. From the amount of players and things like that perspective. And Drake Navy issue, let's take a quick look at that one, but I think that was just that favorite combination. Yeah, look at the amount of launchers on this one, and then it also has 5 medium drones potential, can field 5 small drones as well, and then it has that potential shield tank. So this one, of course, there's a reason why it's more expensive than the others, in my opinion. It is just really an amazing ship with, in my opinion, the strongest combination. So this is really gonna be interesting. We'll keep doing some faction warfare, some faction ships in the upcoming weeks. Unless some of you guys have another suggestion, definitely put that in the comments. We'll try to work that in. But this might also be a time where we won't see the different sides have different price ranges because of their LP potential. Under the new system, it is possible that becomes far more uniform, and then it's just everything costs the same in input materials, and then it's just what's the most popular one, that's the most expensive one. So it's going to be interesting to see what happens as we go through the list and as we take a look perhaps at some of these later down the line as well. But for now, that's it for this Eve Talk, guys. Thank you very much for watching, and as always, I'll see you next time.